What exactly is a savings plan and how can you use them for your investments at the stock market? What are the benefits of investing with a savings plan? In this new video, we will talk about savings plans and their benefits. So let's go with this next video. Hi everyone, my name is Sven and I want to show you with my videos that taking care of your personal finances doesn't need to be complicated. In today's video, after my holiday break, we will have a look at savings plans. A savings plan is effectively an investment plan which will be executed automatically at a chosen date and at a frequency of your choice. As an example, you could define that you want to invest €100 at the beginning of each month into an ETF following the MSCI World Index. In a normal world, a recurring investment of smaller amounts, like in the example of the monthly €100, will be more likely than bigger single investments of thousands of euros. That's why savings plans are quite useful, because after the initial setup, they will be automatically executed each month without any actions from your side. Besides a monthly frequency, you could also just choose a bi-monthly or quarterly execution. The amount you want to invest every month, every second month or every quarter might be restricted by a minimum or maximum amount of your broker of choice. Usually you can start investing via savings plans with amounts of €25. But at some brokers like Trade Republic, you can already invest monthly with €10 or at ING DiBa even with a minimum of just €1. So in fact, the minimum amount for using savings plans is nearly not existing anymore. Besides the minimum amount of savings plans, you should also pay attention to the fees charged for each savings plans transaction. For some brokers, savings plans transactions might be free, but at others they will charge you a flat and steady fee, independent of the investing amount, or they will charge you a percentage of the transaction amount. Especially if you want to invest bigger amounts with each transaction, the percentage fees can accumulate to a significant negative amount over time. Still, the fees for automatic savings plans transactions are usually a lot lower than investing amounts by manual single transactions through your broker. But there are also other and a lot more benefits when it comes to investing with a savings plan. Let's have a look at them in our second part here. Investing smaller amounts at the stock market with savings plans on a regular basis has different benefits. Two benefits we already covered in the first part of this video. A savings plan can already be started with smaller amounts of €25 and less. This enables nearly everyone to become an investor and to profit from the growth of the stock market. Even young people or households with lower saving rates can use a savings plan to build up significant assets over time. Why even smaller investing amounts make sense, especially when you are starting early, will be covered in another video. The second benefit already mentioned are the low fees and costs of savings plans. The investment transaction can be free or the fee is usually around €1 to €2. For single investments at the stock market, usually brokers charge a much higher fee, which can be like €10 to €60. So single investments make just sense if you receive an extraordinary amount of money, like a heritage or a bigger gift, which you want to immediately invest in the stock market. For smaller amounts, the transaction fees are so high that single transactions are not really an option. As another benefit, savings plans enable young people and beginners to get a feeling for the volatility of the stock market. The stock market does not develop in a linear fashion, and even longer phases of negative returns are temporarily possible. This up and down might be scary for new investors and lead maybe to unfavorable reactions like panic sales or irrational changes in the investment strategy. Here it might help that new investors use a savings plan to invest smaller amounts slowly and constantly at the stock market to get used to the volatility of the market instead of directly investing a bigger amount with a single investment. On top, ETF savings plans have a disciplinary effect because the investments are executed automatically, if not stopped actively by the investor. When your savings plans transactions are executed at the beginning of the month, after you received your salary, it is ensured that you meet your monthly savings or investing goal. You don't have to actively decide whether you want to spend the remaining money for something at the end of the month or whether you want to invest it. Everything is running on autopilot after your initial setup, which makes Savings Plan an easy and convenient investing tool. It completely removes the emotional factor from the investment decision, because you don't have to actively think about it. Everything is running automatically. Since you invest with Savings Plan on a regular basis at different points of time, you reduce the risk of entering the market with the biggest single investment at an unfavorable time, where the stock market crashes afterwards. On the other hand, it also reduces the chance of investing a large amount before a significant increase. Instead, you invest at several points of time during a year, like for example the beginning of each month. This reduces the risk of hitting the wrong point of time for an investment, because nobody can say when is the correct time to invest at the stock market. The last benefit of Savings Plan is the flexibility. You can cancel your savings plans at any point of time before the next transaction is triggered, or you can create a new savings plan for an additional ETF. Also, increases or decreases of your defined regular investing amount can be done at any point of time. Bigger updates should just happen in unexpected situations or well-researched changes in your investing strategy where you further optimize your investing. Temporary increases or decreases of savings plans can also be used for rebalancing purposes to bring your portfolio back to the initially designed asset allocation. I hope this video helped you to understand savings plans and their benefits better. So far, I did nearly all my investments with savings plans in just one single investment transaction. Savings plans are a perfect way to save and invest some money on a regular basis at the stock market. To stay on board for future content, feel free to subscribe and to leave a like to support this channel. I'm looking forward to getting your feedback in the comments below and preparing the next video for you. So see you soon and have a great day.